What's up, you guys? We back. I know it's been a minute since you've seen us. I know y'all seen a lot of me. I've been dropping videos and after videos, giving some game up and stuff, and then you see me at the podcasts and stuff, but you haven't seen this lady in a minute.
Haven't seen Queen. How y'all doing? So I'm great.
Yeah, she good. Wasn't nothing wrong. She just haven't been in the videos, but she in the video today because today we talking about some family business. So, originally we started this basically talking about how we building our family empire. So we want to give you an update on some things that we've been doing in the building of this empire. So first and foremost, the thing we want to talk about today is the insurance, the life insurance policies. So I know a couple of episodes back, we talked about how we had gotten a life insurance policy and how the life insurance policy we got was one that was like an investment and how it was going to help us build a legacy and all that good shit. Well, that was kind of true and kind of wasn't. So
different levels.
It's right? Different levels to all this stuff out here, man. And that's what you out here to do when you're building an empire. You out here to make mistakes. But one thing is, you out here to get several different opinions.
But
you know
when
what I'm saying?
Into networking and all that, you start finding out different things.
So basically, when you, like, say you go to the doctor, you don't only get one doctor opinion. You get multiple opinions. You might get three. You know what I'm saying? So when it comes to your finances, you don't only want to go with one financial advisor or one company. You want to consult with multiple companies to find out what works for you and what's the best for you, because every company going to sell themselves. Hey, chill out.
And C plan.
But it's not so much A plan, B plan, C plan. It's more so like finding out which one has the best plan, period. So I'm not going to go with one if I know this one is better, but I won't know unless I go and check them all out. So we checked out one, got excited, jumped on it, but then we found another one, and then that's what it is. So I'm going to get down to the nitty-gritty. So we went with Edward Jones, and we got what's called an IUL, which is an Index Universal Life Insurance Policy, which what we finding out is not the one we should have, or not the one we want, based on what our goals were with the life insurance policy. But it's all good. It's still going to do the things we need to do, but not quite how we want to do them. So we at a networking mixer met a lady by the name of Christina, and we're gonna put her LinkedIn information in the comment section so that you could be able to tap in with her. But we talked to her, right? And she's from New York Life. So we found out that New York Life is an older company, and for the most part, a little bit more reputable. Not want to shit on Edward Jones, but just New York Life, I guess, has a little bit of better reputation, been around a little longer, and did a little more stuff.
Here's where you want to be.
And I guess it's a better place to go sometimes for certain things, depending on what you want to do. But then I just recently met somebody that works with Northwestern Mutual, which is another company that deals in finances and helping you get together all that good stuff when you retire, when you die, and all that other good stuff. And they even saying that they a little bit a step ahead of New York Life. So you never know. I'm gonna talk to that. Supposed to be talking to that dude on Thursday, and just seeing what they can do and getting some information. Yeah. So getting information from different sources to find out what's best for us. And really, what's best for us is who's going to help us to keep our money and grow our money, because that's what it's about. It ain't about how much you make, it's how much you keep, and how we can make it grow and how we can pass it on.
And how many insurance plans that you can have, right?
And, well, that's a way that we build up your wealth, by having multiple insurance policies. Right. And that's what we learned. So the policy that we learned about is called the variable life insurance policy. That's the policy I was trying to get to, but I didn't know the word, so I didn't know what to ask her for. So she didn't give me the right policy at the first financial agency, which was Edward Jones. But in New York Life, she basically told me what we want is a variable policy. So the variable policy worked like this. You get your death benefit, and you pay your monthly premium, but there's a portion of the money that is constantly growing. And that money that is growing over time, you can borrow against it. So you can get these policies for your children and for yourself. Also, you could use these policies as an IRA or a retirement fund, because like an IRA, it has the tax benefits, but also it what makes it better than the IRA is that you can put more money into it. than the IRA, because the IRA maxes out at $6,000 per year, and then when you make a certain amount, you can't even get the IRA no more. So those life insurance policies are the ones you can get into to start putting money aside. Okay, so it's called a variable life insurance policy. So let me give you an example. We're going to get these policies for our kids. So say my daughter right now that is 9 years old, we get her the variable life insurance policy. By the time she turns, or let's say 10 years from now, 19 years old, she's ready to, figure out what she wants to be in life, and she wants to make an investment in her future. Well, there's going to be a portion of money in her policy that's been growing over 10 years that she can draw from and borrow off of and be able to use to fund her dreams. Now, that's to add to the fact that we're working on building their credit by making them authorized users on our credit cards that are in good standing, creating credit history and all that. So basically,
we spoke with them about that too,
right,
so.
Definitely. So if you combine building them credit right now at a young age, so by the time they're 18 they have credit history and have good credit, then combine that with life insurance policies that they can draw off of and borrow against, we're basically putting our kids in a good position to be able to get wealthy and to not have to struggle. So the life insurance policies that we're getting are called variable life. So I know the title of this episode is called 1.5 billion policy, and that's what we got right now. So with New York Life, me, myself, and my wife individually have a $1.5 million policy. Now, a lot of y'all might be saying, well, yeah, I understand and I know the importance of having life insurance and all that, but that is high, that is expensive to get that kind of policy. How can you afford that policy? Well, y'all know we ain't rich yet, but we getting there. But the way we are able to afford the policy is that there's a way in which you can structure the policy like we did. And so how we structured it is, it's a temporary policy, which means that for the first 10 years of the policy, we're paying as if it's like, I would say the difference between a term policy and a whole life policy. For the first 10 years, we're paying on it like a term life policy. But after those 10 years, we have to transform it over to a permanent policy. When we transfer it to a permanent policy, it'll cost more, but at least by that time, we'll be making more to be able to afford the higher cost of that type of policy. So the benefit of that is the 10 years gives you time to get your finances to the point where you can afford to pay that higher premium. Also, they have a clause in it to where for a certain period of time, there's a low end that you can pay and a high end that you can pay on your insurance policy. So let's say, because we're businesses, we small businesses, and month to month and week to week, our income is not the same. So say we having a bad month, we have the ability, or a bad season, we have an ability to pay the lower end of our premium until things turn around, and then we can pay the higher end of our premium. But we have to make sure it makes sense. So let me give you an example. Say this next couple of months ain't gonna be too good for our business. So usually we pay $139, right? Well, the lower end of it is like $27 a month. Well, for a certain period of time, this insurance company will allow us to pay the $27 per month on our insurance and keep our insurance.
That's if the business is
right.
not doing as
well. It's all based upon us. Let's just say
income.
We say that our income ain't doing too good, but we still want to maintain our life insurance policy. Instead of letting it lapse by not paying it, there's an option that we can pay a lesser amount.
So it's like payments. Then it's like,
but it's not payments, like, because you don't owe nothing. You're not going to have to make up for what you didn't pay. Basically, when we pay the lesser amount, it's a lesser amount, but it's still enough to cover our policy and keep us current. So they have that option for people like us who have businesses, and businesses go up and down. So that's the beauty of the program. So again, it's called a variable life insurance policy. Stay away from the IUL. Stay away from the index universal life insurance policy. Stay away from those. You need to get the variable life insurance policy. You probably already know about it. We probably ain't giving you game, but for the people who don't know, we letting you know. Get a variable life insurance policy. And if you think, we can't afford it, ask for the option of getting temporary, and then see how long the time frame is from the temporary for that you can get the money to transfer over to the permanent. It's still gonna count the same. If we wait 10 years before we change to the permanent plan, we still gonna have the same rate, We still gonna have everything the same as when we first signed up for the insurance. So it's like we lock in a premium so that we can pay that same amount. So say, right now we're not millionaires, but 10 years from now we millionaires. We can still lock in that same rate, even though we making more and able to afford more. Well, all that means is we're gonna buy more life insurance policies. You feel me?
Like Jay was saying, like this one man was like 16.
Well, basically this
They
one
cut you
dude,
down though.
this one dude, they allowed him to get 18 policies
18.
total. So you can get as many policies that they will let you get. And you say, well, why would I want all these life insurance policies? But because it's an investment and it's an asset. So basically what it does is it allows you to put money aside and have it grow for you tax-free. And you can take from these benefits at any given time. I mean, yes, it will be an actual loan, but let's just say I borrow from this and I pass away before I pay it off. All it will do is subtract from my death benefit. So say I borrowed $50,000 from my life insurance policy, but my death benefit is $100,000. If I pass away before I pay it back, they will just subtract the $50,000 from my death benefit, and then the rest will have to be used towards my funeral. And when you look at it, you really don't need that much for a funeral. You know what I'm saying? We don't need a $1.5 million policy, but the money is going to the children when I pass away. The money is going to my wife if I pass away for her, and her is doing the reverse if, she passed away. So people, get life insurance, man. Get out here, get your life insurance. It costs nothing to talk to a financial advisor.
Mouth. If you don't open your mouth and find out things, then you won't know. So don't be scared to,
ask.
And
it doesn't cost. Listen, if y'all worried about, I can't afford a financial advisor, it does not cost no money to talk to a financial advisor.
To find out these things.
To find out this information. Everybody we talk to is for free. I'm about to talk to somebody else on Thursday. He's going to be free. The Edward Jones, that was free. It's free to talk, but they make their money a different way. But you can get the information and it's available. And these people are willing to talk to you. I've had several Zoom calls with all these people, and they always willing to talk to you. And it don't cost nothing but a little time, but you're getting educated. Yeah. So stay away from the IULs. Run towards the variable life insurance policies. That's the policy you need to be focused on. So that's what the title of this show came from, or this episode came from, the $1.5 million policy, because we both got $1.5 million policies. And the crazy thing about it is we haven't completed the process, right, for getting the policies. But right now, since we signed the initial paperwork and put the initial payment down, right now, if I pass, God forbid, my family will get $1.5 million. And we haven't even had the policy a month yet.
That one, but
we had other policy, but we haven't had that one for a month yet. And that's how serious it is. That's how credible this company is and going through New York Life. So we do want to shout out New York Life and Christina for helping us out, putting us on, and giving us the game. But New York Life, check them out. Edward Jones, talk to him. Figure out who got the best thing for you. But right now, what's popping with us? New York Life. New York Life. It seems like they got everything we need. But like I said, I'm gonna be talking to Northwestern Mutual on Thursday to find out what they talking about. And it's just like anything else.
It's gonna be something different.
It's gonna be something new.
You're gonna be like, wow, okay, y'all talking something
When
else.
it comes to your money, make people compete to give you the best offer. Make them do what they have to do. Don't just sit up there and let anybody tell you anything. Make them do what they got to do, because it's your money. It's your future. It's your legacy. You know what I'm saying? And you want the best outcome. So I'm not saying heckle people or whatever. I'm just saying make them do what they need to do to give you exactly what you want.
Them insurance people that come to your door and they get them your payment and stuff. We ain't talking about them, because a lot of people is using them type of insurance.
Well, I mean, they just regular insurance people. They just come to door to door. But these people either sell term life or whole life insurance policies. And these are just basic policies that you just pay on, and they're supposed to take care of you when you pass away, and you get money to beneficiaries. Those are just basic policies.
Yes.
Them policies have no risk to them. Let me be clear on that. These policies have no risk. But our policy, which is the variable policy, has a slight risk, because they're investing the money with a promise of a return. Okay, what that return will be, it depends upon the market because it's being invested. So there is some sort of a risk, but they have been known to basically be very secure. You know what I'm saying? So it's a risk we're willing to take because if the money's either sitting or not sitting, or if it's in a regular life insurance policy where we can't touch it or do nothing with it, we just spending money, and then the only time we can actualize it is if somebody passes. That's no bueno. So we got this variable life insurance policy. So y'all tap in. Other than that, we got a lot of stuff going on. Queen and I are about to start a little class at a little church that we a part of, teaching some people a little bit about health and wellness. I've started doing a little personal training. You know what I'm saying? Something I'm passionate about because I like to work out. You see us, we work out all the time. If
We
you
are
follow
both
our
passionate
social
about
media
working
page.
out.
Yeah, so we fell in love with it and we do it all the time. So we got that cracking and we about to start a regular class to give people a little workout. That's something that she more is into. So she getting that, but I'm actually taking the course for personal training right now.
He's actually getting pulled into that side because
Yeah, I'm getting pulled in
because
I'm a coach. Yeah, so I'm getting pulled in.
When you're a coach, it seems like that's something that should be a part of being a coach.
Well, I want to add more value to my coaching experience, so I feel like working out is a part of it, and if I can help them work out as well as with business coaching, then it's a win-win. So I'm getting certified as a personal trainer at the moment, doing it online, so I can bring that stuff to you. Still doing cleanup, man. She's still selling sea moss. Matter of fact, our next big situation is what? Taste the Soul LA, which is going down to October 21st. So we getting that together. So we got that coming up. We got the church event that we want to get done. What else, man? We got a lot of stuff. We just constantly building towards this empire.
So this is our first time about to host not an aerobic, but just a fitness class, and we're gonna make it fun. We're gonna make it real fun and interested. We know we're gonna have different ages, older, middle age, young. We're gonna have all of that, and we gonna make it work because we got to deal with different, you know. So we're gonna make it work. Whoever can go fast, then hey, get your workout out the way. Whoever got to go slow, as long as you still getting that workout, that's all that matters, that you did it. And that's what we here for, to help people, you know, get their health under control. That's it. So yeah.
So we'll be doing that soon, and we'll be posting that. Obviously we don't have a video about that when we do that. And then what else? So we got the church event with the health and wellness. We got the Taste of Soul LA going down on October 21st. We got me doing personal training, certifying. I'll be probably certified in the next couple of weeks, but right now I'm just taking an online course. We still doing CMOS. I'm still doing cleanup, man. We still doing everything, man. We just ain't be making no videos, but we're gonna make more videos on us and behind the scenes and stuff like that. I'm still gonna be making my videos for Coach E, so y'all can tap in with that to get some game and some advice on life and on everything and how you should move and what you should move. You know, I've been through it, I've seen it, she's been through it, she's seen it, so we got a lot of game to give. We know, you know, if you need it, if you need some inspiration, if you need some motivation, you know, tap into our pages, you know what I'm saying, on Instagram. And you see her working out, you see me working out, you know what I'm saying? We pushing, we got our children, we still got our businesses, but we still pushing and maintaining and striving towards our goal.
Mom and dad and the husband
Mom,
and
dad,
wife
husband,
and all
going
that
through
good
all those
stuff.
ups and downs and shit. So, you know, tap in with us. It was fun seeing y'all again. We're going to be back. We're going to do more videos. But for now, this is going to do. So remember, get that variable life insurance policy, not the IUL. For all those that don't know the difference, you found out here. Listen to the beginning of the video. Variable life, not the index universal, okay? Variable life, okay? Remember that. Till next time, like, share, subscribe, tap in with us.
Comment.
Please comment. Let us know if you already know, if you need some more information, if you like the information, if you want more information. All we doing is telling y'all what we're experiencing.
Interested in that.
Exactly.
Yeah. Tap in. Don't be scared.
Because all we want to do is do stuff and then get y'all game what we did. If you already know, cool. If you didn't know, then we help somebody. But that's what it is, all right? Till next time. Say bye, Queen.